Welcome to the deep dive. We take your complex sources, pull out the key insights, and make you instantly informed. Sometimes these big tech companies, the most impressive results, they often come with a bit of a hidden twist.
Definitely. You see the headlines, but the real story, especially with someone like Amazon, it's usually buried a bit deeper. They play the long game.
And that's exactly what we're going to unpack today. We're doing a deep dive into Amazon's Q2 2025 earnings. Now, on the surface, just a knockout performance. Really strong stuff.
Absolutely. But, and this is where it gets really interesting, underneath all that strength, there's this massive, calculated, and frankly, incredibly expensive pivot towards artificial intelligence.
So it's a study in contrast then.
Exactly. You've got this really healthy core business, operationally strong, but it's basically funding this huge future bet that's actually, eating into the profits right now.
Okay, so our mission today, let's unpack that. We need to understand where Amazon's current strength comes from, get a grip on the sheer scale and the why behind this huge investment cycle, and figure out what it all means for Amazon and potentially for you.
Doing good.
So to really get the scale of this AI gamble, we first need to see the foundation they're building on. And Q2, the period ending June 30th, really showed how solid that is. What were those big headline numbers?
Well, the results were unambiguously strong. They smashed expectations pretty much across the board. Net sales hit, get this, $167.7 billion.
Wow.
Yeah, that's up 13.3% year over year, beating the consensus forecast by like 3.4%. And diluted EPS, $1.68. That's a huge 33.3% jump from last year, and it beat estimates by over 26%.
And operating income.
Also surged, up 30.6% to $19.2 billion. Just really solid numbers.
Looking at those huge figures, was there one specific part driving it all, or was it just, everything clicking at once?
That's the fascinating part. It was broad-based. Every major segment, North America retail, international retail, AWS, advertising, every single one beat expectations.
So the whole machine is running well.
Exactly. It shows real operational strength across the entire company. They're making this big bet from a position of strength, not desperation.
Okay, so incredible profits, fantastic revenue, but then, like you said, there's the contrast. We look at the cash flow statement, and it tells a very different story, doesn't it?
It really does. This is where you see the investment impact starkly. So, trailing 12-month operating cash flow, that stayed pretty healthy, $121.1 billion, up 12%, still generating a lot of cash from operations.
Not bad.
TTM free cash flow had absolutely plummeted down to $18.2 billion.
18.2? From what?
From $53.0 billion in the prior year period.
Whoa, that is a dramatic drop. Over $30 billion less in free cash flow. What's eating all that cash?
It's a deliberate choice. That plunge is almost entirely down to a massive surge in capital expenditures. They are pouring money into building data centers, buying servers, all the infrastructure they need for their big AI push.
So they're basically signaling we're building the future and it costs a lot right now.
Precisely. It's the price tag for AI dominance, paid for by near-term free cash flow. It's a bold move, a classic Amazon long-term play. Few other companies would or could do this at such scale.
Okay, let's dig into the engines driving the current strength, starting with AWS, Amazon Web Services. That's the AI infrastructure layer, right? How did Q2 look there?
AWS had another strong quarter. Net sales hit $30.9 billion, which is up 17.5% year over year, and operating income was $10.2 billion. Still the most profitable part of Amazon by far.
17.5% growth. Strong, but I feel like I've heard some chatter that maybe competitors are growing faster.
That's true. It was noted that the growth rate, while solid, wasn't quite matching some key rivals like Microsoft Azure or Google Cloud in percentage terms. So there is some pressure there on management to keep accelerating.
And what's actually driving that AWS growth now? Is it companies finally done cutting costs after the pandemic boom? Or is it specifically this new wave of generative AI demand?
It seems to be a mix of things. First, yeah, those customer cost optimization efforts seem to be largely over. Second, companies are renewing their focus on moving to the cloud in general. And third, absolutely, there's explosive demand for generative AI, compute power, and services.
Got any examples?
Yeah, they announced major new deals or expansions with big names like PepsiCo, Airbnb, Peloton, SAP that shows real momentum, particularly around AI workloads.
Okay, but with all that spending on new data centers you mentioned, surely that's hitting AWS margins.
It is, and that's expected. The AWS operating margin was about 32.9% in Q2. That's down from 35.5% a year ago.
Still very high, but a noticeable dip.
Right. It's the direct result of all that heavy investment and the increased depreciation expense as those new assets come online.
Yeah.
Building the future isn't cheap.
Right. Now, while AWS is clearly crucial for the future, we can't ignore the core retail business. North America and international stores had, well, a pretty amazing quarter too, didn't they?
They really did. North America's sales grew 11% to $100.1 billion. International was up 16% to $36.8 billion, or 11% if you strip out the currency effects. Both easily beat expectations.
But the really surprising thing was the profit, especially international.
That's the stunner. North America operating income grew nicely, up $2.4 billion to $7.5 billion.
$1.5 billion profit up from what, last year?
Up from just $0.3 billion profit last year. It's a huge turnaround.
What's behind that? How did they suddenly make international profitable?
It's the payoff from years of work on regionalizing their fulfillment network. Basically, using sophisticated AI and logistics to place inventory much, much closer to customers in smaller regional hubs.
Ah, so less shipping distance, fewer touches.
Exactly. It cuts transportation miles way down, reduces package handling, speeds up delivery, and critically lowers the overall cost to serve each customer. That flows right to the bottom line. Plus, they had their biggest Prime Day event ever in Q2, which definitely helped volumes.
Okay, makes sense. And then there's the third engine, the sort of hidden gem
Yeah.
advertising, still growing like crazy.
Like absolute crazy. Ad services revenue jumped 23% year over year to $15.7 billion. Again, easily beating estimates.
$15.7 billion from ads. That's huge.
Yes. And stepping back, you have to see this segment as the sort of hidden profit engine for the whole company. It's incredibly high margin, and it's providing a lot of financial firepower for those massive investments in AWS and AI we talked about.
So when you say it's providing the firepower, how significant is its contribution compared to, say, retail or AWS profit growth?
It's doing a lot of the heavy lifting. Advertising is growing much faster than retail and faster than AWS right now, and the margins are thought to be exceptionally high, probably over 50%.
Wow.
Yeah. So if you look at the year-over-year increase in total operating income for Amazon, which was about $4.5 billion, the increase from advertising revenue alone, maybe around $3 billion year-over-year, likely accounted for a massive chunk of that profit growth, maybe more than half.
Okay, so advertising is essentially funding the AI arms race internally.
In large part, yes. It's a critical enabler.
Got it. Now, let's pivot to the AI vision itself. CEO Andy Jassy was apparently laser-focused on this in his comments. He said, "Our conviction that AI will change every customer experience is starting to play out." What does that look like in practice? What are the actual AI examples?
Right. It's not just talk. They're deploying it across the board. For customers, you see things like the enhanced Alexa Plus assistant, the AI shopping agent getting smarter. They launched a feature called Hear the Highlights. Uses generative AI to turn product summaries into audio clips.
Oh, interesting.
Yeah, and there's a new Nike storefront on Amazon.com, which you have to assume uses AI for discovery and personalization behind the scenes.
And internally, for their own operations. I bet they're using AI heavily there.
Oh, absolutely. They talked about Deep Fleet. It's an AI model optimizing how their warehouse robots move around. They claim it improved efficiency by 10%. AI is also improving their demand forecasting for inventories. 20% better regional accuracy, they said.
Less waste, better stock level.
Exactly. And there's this new robot called Vulcan. It uses AI vision and touch sensors to handle items in cluttered warehouses, aiming to make those jobs safer and, less physically demanding.
And then for the developers, the AWS customers building their own AI stuff?
Yeah, they're rolling out tools there too. Things like Kiro, that's an agentic IDE, basically an AI assistant that helps write code and can sort of act on its own. Strands Agents is an open source tool for building these AI agents, and Bedrock Agent Core is their platform for deploying and managing these agents securely.
Okay, so AI is clearly being embedded everywhere. Q2 is strong, the vision is ambitious. But then we get to the guidance for Q3 2025. And this apparently caused some friction for investors, a negative reaction initially.
That's right. This is where the optimism hit a bit of a wall, at least temporarily. The forward guidance was a mixed bag.
Okay, break it down for us. What did they forecast for Q3?
So for net sales, the forecast is $174.0 billion to $179.5 billion. That's growth of 10% to 13% year over year. The midpoint of that range is actually comfortably above what analysts were expecting, so top-line momentum looks good.
Okay, that sounds positive. Where's the friction then? Must be the operating income.
Bingo. That's the crucial piece. The operating income forecast is $15.5 billion to $20.5 billion. The midpoint there is $18.0 billion.
And how does that compare?
It's notably below what Wall Street had penciled in. And more importantly, it implies Very little, if any, growth compared to the operating income they achieved back in Q3 of 2024.
Ah, so sales up strongly, but profit potentially flat year over year. That does sound like a disconnect.
It is. And that's the crux of the investor dilemma right there.
Mhm.
That muted profit outlook spooked some people.
So does this mean the business fundamentals are suddenly deteriorating? Or is there another explanation? Because the Q2 results were so strong.
No, the sources are really clear on this. This isn't deteriorating fundamentals. It's a deliberate and actually a telegraphed consequence of hitting the accelerator on AI spending.
Telegraphed. They warned this was coming.
Explicitly. Management said capital investments will be significantly higher in the second half of the year, mainly driven by building out AWS infrastructure to meet that soaring AI demand we talked about. So this guidance, really, it's just the price tag for building the future, as the outline put it.
They're telling you up front, building this AI future is expensive and it's going to weigh on profits for a bit.
Exactly. It's an open declaration of their priorities.
Yeah.
Long-term AI dominance over maximizing near-term profit.
Okay, looking bigger picture then, this feels like, as you said, a full-scale mobilization, a technological arms race in AI. Is this spending purely defensive, just keeping up with Microsoft and Google, or is it more ambitious?
Well, it's definitely a response to the aggressive moves by competitors. You can't ignore what Microsoft is doing with OpenAI and Azure or Google with its AI investments. So there's a defensive element for sure, but it's also proactive and incredibly ambitious. Look at their approach. They're designing their own custom AI chips, Trainium and Inferentia. They're providing the platform layer with Bedrock, giving access to models from Anthropic, Meta, Stability AI, and their own Titan models. And they're building the end-user apps like Alexa Plus and Amazon Q. They want to own, or at least be a major player, at every single layer of the AI stack.
Trying to control the whole ecosystem.
Pretty much. They want to be the indispensable platform for the AI economy.
So the big debate for anyone looking at Amazon is this a visionary investment, like AWS was back in the day, or is it just a massive capital sinkhole, pouring billions into a hyper-competitive market where maybe the returns just get competed away?
That is the central question. Is it genius foresight securing the next decade of growth, or is it value-destructive spending and a brutal fight? It's a really high-stakes bet. The answer isn't clear yet.
And it's not just AI, right? Are there other big long-term bets that also soak up capital?
Yeah, while AI gets all the headlines now, they're still nurturing other huge projects. Project Kuiper is the main one.
Right, there's satellite internet constellation.
Yeah.
Low Earth orbit, competing with Starlink.
Exactly. They mentioned recent milestones there too, successful satellite launches and distribution deal in South America for broadband access is another example of that classic Amazon philosophy. Planting seeds. Investing heavily today in things that they believe could become massive, multi-billion-dollar businesses, maybe 10 years down the road. They're prioritizing creating entirely new markets over just squeezing out profit next quarter. It's like the early days of building fulfillment centers, right? Huge upfront cost. Payoff comes much later.
Okay, so let's try and wrap this up. The core story here seems to be Amazon navigating this huge strategic shift. They're using the incredible cash generation from their, very resilient e-commerce and advertising businesses.
Which are running exceptionally well.
Right, exceptionally well. And using that cash to fund this massive bet on artificial intelligence as the next big growth engine. The current machine is humming, but the forward guidance clearly shows the immense cost of building the next machine.
Perfectly put. And for you listening to this, it creates some very clear risks, but also opportunities.
Okay, let's break those down. Risks first.
Well, number one is execution risk. Can they actually turn all this spending into winning AI products and services that generate sustained high-margin revenue? It's not guaranteed.
True. What else?
Competitive intensity. The fight in cloud and AI is fierce. Microsoft, Google, and others aren't standing still. That can mean spending stays high for longer, keeping margins under pressure.
And the timeline.
Yeah, the capital cycle duration. How long will free cash flows stay depressed like this before the financial benefits of these AI investments actually start showing up in a big way? Could be a while.
Okay, those are some significant risks. But what about the flip side? The opportunities.
The biggest one is AI platform dominance.
Yeah.
If AWS does become the go-to infrastructure backbone for the global AI economy, the upside is just enormous.
Like being the utility provider for the next industrial revolution.
Kind of, yeah. Then there's still room in the core business. Retail margin expansion could continue as they keep optimizing that fulfillment network, more profit growth from the existing machine.
And advertising.
Advertising still seems to have a long runway for high margin growth. And as we saw, that's crucial because it helps fund everything else, including maybe even Kuiper down the line.
So putting it all together, what does this massive bet by Amazon tell us about innovation today? About balancing Wall Street's short-term demands with, truly long-term ambitious goals.
It really highlights that tension, doesn't it? Amazon is placing this enormous wager, and it kind of forces you to ask, what is the true cost and the potential payoff of trying to be at the absolute forefront of a revolution like AI? It's clearly not cheap, and it's definitely not certain.
Yeah, this deep dive really shows that even the most successful giants face these incredibly tough choices. Maximize now or invest massively for potential future dominance. It makes you wonder, what other industries are facing similar crossroads right now, making huge, potentially transformative bets where the payoff is years away and far from guaranteed? Something to think about as you look at the business world around you.